I read this article and I wanted to share it with you guys. So it quickly talks about how the how the S&P 500 market has gone with its longest stretch without a 2% pullback, meaning that the S&P 500 has not sold off more than 2% in more than 377 days. And if you're a little bit newer to the market, you're like, well, why would I really even care about this? Now, this doesn't mean that you should be selling all of your investments, right? But what this kind of showcases, and this article quickly talks about it, so feel free to Google search it yourself, is that anytime that a prolonged stretch like this happens, hedge funds and institutions simply begin to hedge their positions. And that doesn't mean that they lock in profits on all of their investments, but that they are now somewhat anticipating somewhat of a pullback, right? And it only makes sense that if others are doing it, then we should at least just be aware of why. And that's exactly why I'm making this video, because I believe that as the NASDAQ and S&P 500 market continue to reach new all-time highs and become extremely overbought, it's not that I believe that the market has to crash. No one can predict that. But I think it would be very safe to say that anytime that the market becomes this overbought for such a long period of time, it's only a matter of time for the market to pull on back. So why not prepare, right? A lot of you guys know about SPY. SPY is the ETF that follows the S&P 500. Do you know the inverse ETF, the one that goes up when the S&P 500 goes down? I believe that there's another one, but it's SPXS is the one that I'm pretty familiar with. This is the inverse. So this does the opposite of what SPY does. So the really cool thing about this is that when markets, or if markets such as the S&P and the NASDAQ begin to sell off, then the great thing about this is that, well, then this thing begins to go up. And obviously it's not going to go up for a very long period of time because markets are more bullish, but at least you know kind of where to hedge your pullback by being able to go long on something that then goes up when the S&P 500 goes down. So I wanted to highlight some specific points. So the S&P 500 has gone 377 days without a 2.05% sell-off, the longest stretch for the benchmark since the great financial crisis. That's really what got my attention. We have not experienced a pullback of 2% for this long. And the last time that anything like this happened was, again, everyone always just loves to compare it to, the great financial crisis, which was back in 2008. So the market lull comes as investors pile into mega cap tech companies such as NVIDIA amid bets on artificial intelligence, which boost profits. So I don't think anyone would really be surprised by this, that NVIDIA has had an extremely successful year would be like an understatement. It's an incredible year. NVIDIA has now become one of the most valuable companies that's publicly traded. Be honest, 3 to 5 years ago, if you weren't into tech, you probably never heard of NVIDIA, right? Because they were just a chip manufacturer. But now think about it. Out of every company that's publicly traded, they are the most valuable. That's pretty wild, right? And it gained this momentum so quick because of AI. And I think AI is, and I'm saying this, right? My LPP knows that I talk about NVIDIA all the time. You guys know that I'm very I love shorting the market when it's overbought in preparation for a pullback, but never do I ever have the intention of shorting NVIDIA. NVIDIA is like the juggernaut of big tech as of right now. And I really do believe that AI is scratching the surface when it comes down to what we have now to what we can have, right? So I do believe that there is more growth potential for NVIDIA, but it does kind of raise some red flags on how quickly it's gaining momentum and how overbought it's become within a very short period of time, because we've seen it. We've seen it with NVIDIA, and I want to pull it up for you guys just so, again, you're not surprised. This isn't to scare you or to encourage you to sell, but we have seen it with NVIDIA that when it becomes really, really bullish within a very short period of time, there are these pullbacks. We hit from, again, now after the stock split, it shows from $97 down to lows of 75. You might be like, well, that's not a very significant pullback, right? Well, if you think about it, it is. It's a 20% pullback, and it did that within just a few weeks. And that's the thing that I want to remind you, is that when we become extremely overbought, these pullbacks are not an if they could happen, but it's a when they can happen. And that's exactly why I'm making this video. I would rather you be someone that is prepared for when a pullback does end up happening, even if it doesn't happen soon, but rather than surprised. I think that's the biggest thing that I want to express within my videos is it's better to be prepared than to be surprised, and to simply create a plan of action of, hey, if markets do begin to pull on back, if Nvidia does begin to pull on back and you're long on a lot of these positions, it doesn't mean you have to lock in profits on everything, but simply know where to put your money to kind of hedge, which means to be able to offset the loss that you might take during those pullbacks. Maybe you reduce your position size at those overbought levels. Maybe you just know where to put your money on red days because you know how to trade inverse ETFs that go up when markets go down. Maybe you know how to trade options and you get a put option, whatever the case might be. My biggest thing is to create a plan of action before the pullback happens, not after, and then end up regretting it. Do you get what I mean? So let me go ahead and share one other thing that I think really stood out to me that maybe not a lot of people know. So at high levels, the clouds of macro uncertainty have parted over the last 12 months. So the big thing that I want to focus on here is when they begin to talk about the VIX index. For those that are not familiar of what the VIX index is, it's known as the volatility index. Anytime that there's fear being injected into the market, the VIX index goes up. But guess what has happened recently? So in the last month, we have hit the lowest level going on November since of 2020 on Friday, where it traded at 13. And these are historically low levels. So this is expressing that not only have we not experienced a pullback in a really long time and we're very overbought, but volatility and fear is very low. So it's not now it has to happen this week or next week, but it's that we are extremely overbought. There's very little fear. And really anything at these very critical and overbought levels, if fear begins to rise for whatever the case might be, if it's certain economic data, if it's specific news, if fear begins to rise, volatility begins to rise, and then sell-offs begin to happen. So again, all the stars are kind of beginning to align. They show you that, hey, we are overbought. We haven't pulled back in a while. Fear is very low. So then when fear begins to be installed into the market, then again, you cannot be surprised that a slight little pullback might begin to happen, especially after a 377-day run where we haven't pulled on back. And for those that are not aware, again, the VIX index is something that you can pull up literally on almost every platform. If you can't pull it up on your platform, then maybe it's time to switch it up. I do use Webull myself, and if you want to download it, it's the 5th link in the description down below, and you get a sign-up bonus when you use my link. I also do get a free stock when you use my link. You get 12 free stocks. Just a heads up on that. But you could see that the VIX index is extremely low, very oversold. And again, when the market rallies, I want to show you. This is the last thing I'm going to show you, but I think you'll find it very interesting. I love sharing this with my LPP team. So you guys could see that, when was this? The last time that the VIX index began to go up was, April 16th. So let me go ahead and pull up the NASDAQ market, or let's just pull up S&P 500. So April 15th it was, right? And we could see April 15th to 19th, that's when the market pulled on back, right? So when we see, let me go ahead and pull it up here one more time just so you guys can see exactly what I'm talking about. When the VIX index begins to rise, just like you saw here, right, from the start of January, it was a steady rise of more fear, more fear, more fear. And then all of a sudden we began to rise up until, you can see the dates down here, April, up to the highs of April 17th, April 19th, right? You could see here that for SPY, January, right? January, we were still rising, all of that, but it was around April that then we began to decline. You can see the date down here, April 19th, April 20th. You can see that that's when we began to sell off. So you could see the correlation. When the VIX index begins to rise, that means more volatility is being injected into the market, more fear is being injected into the market, and therefore markets begin to pull on back. When the VIX index begins to drop, there's less fear in the market, less volatility, markets naturally begin to rise. And I think it's a very useful indicator, especially as we are, again, extremely oversold, that if we begin to see any sudden spikes in the VIX index, we cannot be surprised that, the market is most likely going to pull on back. So let's just make sure that we have a plan of action. Let me know in the comment section. I know this is kind of a random video, but again, I love making videos like this, not because, again, we're here to try to predict the future. You guys know that we can't, right? We have no crystal ball. It's impossible, but we can always prepare for a better future, a better tomorrow. One of the biggest regrets that I always have is, man, I wish I was aware that this thing was going to either happen, or how could I have better prepared? And I think this video can do just that. We're making you aware that the markets are extremely overbought. We haven't pulled back more than 2% in a very long time. The last time that this happened was back in 2008, and the VIX index is extremely low. So it wouldn't take much for fear to be injected. So it's not that you have to use that plan, but that you at least have a plan of action. So if it does happen, you know exactly what to do and how to make or keep your money. And that's the beautiful thing about trading, is that you don't have to be perfect. You just have to be prepared. I appreciate your time. I hope that earned your thumbs up. If you ever have any questions, feel free to comment down below. And I would love to invite you, if you want to watch me trade live as soon as Monday when the market opens. I trade live every morning. It's the second link in the description down below. So you can sign up today, begin to watch the lesson library, and watch me trade live as soon as Monday as the market opens. And remember, it's a one-time payment, lifetime access. And right now, with that link down below, it's 50% off, which is our biggest discount. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.